Welcome, Maverick Traders. It's Monday, the September 19th version of Market Roundup. That's right. We're continuing straight along with what happened on Friday as pessimism kind of continues to creep into these markets. That CPI number and knowing that there's inflation has really kind of shaken things up a little bit. However, we did come off the lows pretty aggressively. I'm not sure if this is a short cover rally. Let's talk about it. I've got my 2 cents. It's my opinion. Follow along. Take responsibility. You get it. Let's get into the market analysis because Friday did close below some key levels. Monday gap down, and we retraced the majority of the losses, thinking we get a flush out. We didn't. It just came right back up, but it didn't really go anywhere significantly as far as technical levels. Now, I covered a lot really quickly there, guys, because we haven't really done much since Friday. I thought we'd have a flush lower, maybe retest some of those lows that we set closer to June. But we didn't. We turned right around off the bottom and climbed higher, but we really didn't gain any significant ground. What am I talking about? Well, the Dow, the S&P, and the NASDAQ up almost, over 0.5%. NASDAQ, 0.75%. Russell's just shy of 1%. Oil had a bounce, and gold was slipping a little further. A little bit of news about the dollar and if it's going to sustain and be able to stabilize. And there's all sorts of pessimistic news out there. Folks, here's a few headlines that I pulled up from just one website. Take it for what you will. I mean, I'm still going to follow the technicals. We are below levels. So the bearish sentiment in the news, but we do have that Fed statement on Wednesday. Based on what we got last week, I would not be surprised if we get the full amount of what the Fed's wanting to put the hammer down on, which is to be expected. I don't know why anything's outside of what the markets have done. Now let's look at the advanced decline line here. We've got 41% declining, 55 advancing. That's because we had a pretty good bounce off the bottom. We didn't really gain any ground. Once again, this isn't an optimistic thing. We're still below those levels. But, hey, we had positive move to the upside. I don't think it was anything of maybe speculative buying. I really think it maybe just was short cover rallying or a lack of selling. Above, below the 50-day moving average tells a different story. Even with a little bit of a move up that we had today, it really didn't gain ground. 73% of stocks are below their 50-day. So let's jump into the charts themselves, and you can see what I'm talking about. So we had a pretty good move up to this area. Look at my pin here. From the bottom to the top, but the key level is that level here at the 380 on the SPY. That's a big one. We talked about it in the past here as well. It's just kind of that line in the sand, and this volume was weak to say the least. This is why I think it was more of, okay, we stopped selling, maybe some short covers, things of that nature. Now, guys, if you take a look at the VIX, I don't have the chart up, but the VIX dropped a little bit today, and it is nowhere near in panic levels. We are really in a situation to where we get some speculative buying, and then it stops, and then we get moves that we saw going into the end of last week. So a little bit of speculative moving, or speculative buying up in this area, but not a lot of selling, just stopped. Now, if it was active selling, we'd see a spike in the VIX. So we're just getting some darts being thrown out there, and these markets kind of hovering around, but no panic just yet, and it's because I don't think there's a lot of vesting in these markets, which is completely fine. Let's move over to the Qs, and rightfully so. We have no clear idea of when the Fed needs to put take their foot off the gas. Right now, it seems like they're doing what they can. We've got all sorts of things that are showing signs of slowing, but we have a CPI that continues to creep up. Now, the Qs are holding in there a little bit better than the SPY, and it's just basically because it's so much closer to its support level. Let's go ahead and draw a little bit straighter of a line here. And it's kind of just basically up touching the area, but you can see, let me draw a box over the last couple of days there, so we can see that the volume is also subsiding. Not a lot of optimism at all in the markets. I mean, that's pretty much what you could take off of today's action. And it is only Monday, but it did follow suit with Friday. Friday was kind of a disappointing move to the downside. It did regain a little bit of its loss, but it didn't really gain all the way back up to where it closed. So looking at the sector heat map, it is very specific. Not a lot of healthcare, kind of beat down. But Apple had a pretty good run today, 2.5%. I think Nike said something. I can't see it in there. There it is over in the corner. You guys can see it right over here by my cursor. Up almost 3%. So there's a couple good things, bits, pieces, but not collectively. A couple stocks doing better than others, some doing worse, but nothing really to shake things up or change sentiment completely. So I am still sitting on this outlook, and I'm just charting this. Now, folks, last week, you have to understand, let me get my pin back out because it was pretty interesting that this is, I think, where I did my end of day last week. Right there. Above the averages, or maybe the day before, above the averages, moving higher, so on and so forth, and we're just exactly opposite of that. Definitely below a support level here, looking a whole lot more pessimistic, but we are continuing that downward trend. We absolutely confirmed that pivot right there on a sloping moving average. And so I have to be a little bit pessimistic. And then we got that. Here's another box that's a fun right here. That's a crossover. So those two things just equal bad. Now, where am I at? Well, below the 20, below the 50. With a 20-50 crossover, I've got to be -1 on the week. The reason being is because we seem to be parking here. That could all change Wednesday. We do have the Fed announcement. I don't see what they will do outside of exactly what they're going to. I don't see why they would cut less at all. So if they come in line, is that a good thing? Or maybe the markets are waiting for them to cut more and it becomes a bad thing. We'll see. So I'm definitely -2 moving forward on the longer term. I'm pretty confident with that because anytime I see the markets moving higher, it's on lower volume, and we are below key support levels. That can change, right, guys? That's why we have a midweek update. We'll talk then. Ironically, the only thing that triggered in my watch list were bulls. So take this with a grain of salt, please. But when you've got a little bit of a bounce in the markets after what we've seen over the end of last week, we're seeing what I like to refer to as outperformers. Let's start with Foot Locker. This came from the Wednesday's class, and I love it because it's hanging in there. Resistance up there at the 40 level. I think this could be actually a pretty sweet trade. If it indeed could get above that area, it might be really nice. But you got to be patient with this because it's kind of going in a different direction than the market. Excuse the line there. But I would like to see this consolidate and maybe poke its head up, and we could see a little bit of strength moving forward. So I liked Foot Locker there. We got Wingstop. Maybe people are just running to get some comfort food. Now, this isn't exactly jumping at us as far as, hey, please come buy me. But I do like the uniform move that it's had over this last few days, where the markets actually really fell apart. Yes, now it technically is below support at 140 here, but we can wait. I mean, it did come off of a couple of highs, but it seems like it's hanging over there. Now, we do have a support here at that 20-day moving average, kind of this area here, but I'll use the 20-day. So it can go a little bit lower, but this might be something to hover around on your watch list to the upside. I wouldn't be rushing to buy anything here, to tell you the truth, guys. I mean, you saw my -1 outlook, -2. So, but it's, hey, I've got to talk about the bulls as well as the bears. And then here it is, my $1,700 burrito. I just keep calling it that. Maybe there's a lot more to it than just Mexican food, but hey, it's $1,700 a share. Hanging in there, we talked about this as well on Wednesday, and it looks like it did kind of that same Friday gap down on Monday and came back. So it's doing kind of what the markets did, but you can see it's all above a nice level. It's an uptrend when it does that. It's definitely above previous resistance levels that it set April. So it's just a little bit more glass half full. It's a big mover. It's super expensive. I bring it up reluctantly. I always giggle because even the options are pretty expensive on this thing. But hey, it's outperforming, so hey, I'm going to share it with you. You're welcome. So not much to go off. It is a Monday. Sentiment continues to be pessimistic from Friday's move below key support levels. You guys saw a few of those headlines. Like I say, I just snapshotted those off of one website. I mean, they could be full of crap. It could be that maybe sentiment has just definitely moved to a little bit glass half empty. We'll see. But I mean, where the markets are technically, I could get behind some of those. The FOMC statement on Wednesday, I imagine that we plug around, gap down, move higher. Maybe we'll gap up tomorrow and then fall apart and maybe just chomp around at this area. It'll be interesting to see if the markets get back up to those resistance levels. If they don't, that's fine. But the FOMC statement, whatever the Fed says, we are definitely going to get a reaction out of it, whether they're in line or not. It just depends on what the sentiment is and where the markets want to, or I should say, where the sentiment wants to take the markets. Super light, if any, out there. Earnings reports were way off of it. So check potential trades just in case, so you don't get caught with your pants down, right? Figuratively. All right, folks, that's all I got for you. It's going to be an interesting week. It's probably going to be a little bit volatile into Tuesday and especially maybe into Wednesday, and then it'll go silent. We'll see what the Fed does. So if you don't really don't need to really rush out to do anything, especially with us being below these levels, it might best just sit on your hands until Wednesday. Maybe get a better trade. All right, guys, thanks for joining me. Talk to you next time.